There is a gloomy picture painted by some in which China's economy has peaked and that the country has become less appealing to foreign investment. But the pessimism is frustrated by figures like a record high direct investment from Germany to China in 2023 and highest proportion of German investment in China in its overseas total in nearly 10 years. I talked to some German business people in China for their digests and observations on the ground. How do the German business people think about investing in China?
Many visited China the last time 2018, 2019, and then they returned in 2023, and they are like in a time bubble. They now see that the last 3 years China developed further, and also local competitors increased. But nevertheless, when you speak to Germans come traveling to China, they always like it. So they are also happy to be back, and also to see some things remain the same. People are still friendly here. It's still easy to talk about cooperation, about partnership. The most important thing to see that the biggest risk is not being in China and therefore losing global competitiveness. Major new technologies will be developed in China, and if we are not here to participate in these developments, how can we survive abroad? Luckily, I'm not so worried because most of the German companies here understand that.
Zheng, a world-leading machinery builder, is one of those companies.
Compared to 2023, we want to have around 20 to 30% growth. From my friends who are in the business area, none of the companies will pull back out of China. Some companies, they will put a higher investment. Some companies invest less, but this is not only to do because of China, it's also sometimes a market situation, also a product. Some products not running as good anymore, so you need to change your portfolio.
Rister told me that now over 80% of their business in China are related to NEV cars. Electric cars need different designs and usually lighter car parts, and therefore new machine tools are asked for, especially in China where the market is huge and automakers race to excel.
The NEV market is definitely faster as the combustion car market, so also we need to be faster. Basically they ask very short delivery times, sometimes too short, but they ask. So you need to be innovative and also powerful, and also need to have the high-skilled people. We need to get it more efficient.
You always need to be on your toes, you always need to be agile, always need to adjust. It's a complex environment with customers with high expectations that trains you as a professional, but trains you also as a company.
Across industries, I heard German business people say that China is where companies keep a faster pace and also to stay at the forefront.
You have very good data here, you have access to these data, so R&D or the infrastructure for R&D gives you way better opportunities here than you might have in Germany. And that's why also startups coming to China, as they find the infrastructure. Looking at the health sector, there's a lot happening in this area currently.
You have a digital environment, not just within the big companies like Tencent, but also around the universities where there is good ideas that you can tap into that can help you in digital diagnostics or basically in the question of how you run activities around trials, etc. in a digitalized way. And that for us makes it very appealing.
It's time now for us to learn from Chinese companies. I believe that Chinese companies learned quite well the last 30 years from German companies. I think we should invite also a lot of Chinese OEMs to Germany and suppliers. I think we are really on a level where cooperation could be both ways now.
The confidence that China continues the way of opening up, of developing also in a high quality economy, and to step up, continue the journey that China has done over the past decades.
The 5% growth is firstly obviously higher than all developed countries, but also higher than the average developing country in the world. So peak China is an interesting term. I remember this being used in the context of peak oil, where we were saying that the oil reserves in the world have all been discovered and they're going to be basically used up. And I think the analogy is also flawed really, because here we're not talking about a finite pool of energy. We're actually talking about people who are building things and creating services and who are hugely innovative. So I don't really see how this analogy makes that much sense, to be honest.
We feel this year a lot of German politicians come with big business delegations. It feels that we are returning back to normal business, because business is not about geopolitics. Business is about trade interactions, right? Selling and buying.
There is some thinking about decoupling and de-risking. The risk doesn't matter where you take, when you're in China, US, doesn't matter where. You have always a risk. You just need to control your risk better. Globalization, end of the day, will not break